You're on.
Ladies and gentlemen, boys and girls, children of all ages, welcome to Everything Money. Today is a very special day. You guys are in for a treat, but we'll save that for later. Just don't go anywhere because, man, you don't know when this is coming out. Just in case you haven't realized, I am not Seth. I'm just Damon, the normal guy, hanging out with some of these amazing masterminds over there on the stocks with the candles and the moving averages and the MACD.
His mic is off. His mic is off.
It's on.
Oh.
Mic is off?
It's showing on.
They're saying mic messed up, mic off, echo, echo, echo.
Hold on a second.
Oh, poor Mike.
Hold on.
It's okay, Mike. It's okay.
Paul, you talk for a
Hey,
second.
okay, so guys, that's Damon. Seth is on vacation. We brought Damon in. I've known Damon so Damon was on the Scream team for the Cavs. He was a dancer for the Cavs, and I took chess lessons like 8 or 9 years ago from somebody not named Matt. And I remember him telling me, like, hey, you like Cavs? There's a guy there who always wears white gloves. That was your thing, right? You wore the white gloves, kind of like the Michael Jackson look. He's a really good chess player. He won the Cleveland Chess Championship when he was younger, blah, 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 blah. So I go to a Cavs game. I go to a lot of Cavs games. So I see him, and one day he's passing me by. I go, hey. I hit him. I go, you want to play chess? He's like, nah, that's what I'm talking about. And then he walked off. And then time passed. Again, a buddy of mine, I was with Darnell at a game. He said the same thing to you. He's like, hey, he's like, my man, let's go play some chess. And you're like, yeah, I like it. He's like, so something. Fast forward a few years, I saw you at the Parma Chess Club. And I brought it up. I said, hey, I've seen you, I've talked, blah, blah. Why don't you come talk to me, come work for me? So he came and leased apartments for us.
Yeah.
Leased apartments for us. And yeah, it was a great time. And we sold the property about a year after he started working for us. Maybe, yeah, maybe a little bit more, but either way. And Damon's very enthusiastic. He trades options now. He bought some real estate, sold it in this hot market, made a killing. Now he does options. You like his shirt? Well,
the shirt
it
say?
says,
I didn't even read it today.
if you know what an iron condor is, we can be friends. So we're getting the microphone set up. He's a very enthusiastic guy, in case you can't tell.
Testing. 1, 2, 3. Hello.
Dame Dollars, Saving Seth, Papers Paul, Money Over Everything Mo.
Okay, cool.
Am I live?
Yeah.
Well, ladies and gentlemen, boys and girls, children of all ages, welcome to Everything Money. I am not Seth. Seth is awesome, but I'm standing in for Seth. He is my identical twin, if you didn't know. And I am
Same
joined
mom,
here.
different dad.
Exactly. I'm joined here by the great Mo the Magnificent over there on technical analysis. He's got the candles, he's got the dojis, the moving averages, the RSIs, the MACDs, all those technical stuff that you guys want to know about. Mo's the man. And then the guy who needs no introduction, but I'm going to do it anyway, Mr. Everything Money himself, the great Paul Dini. What?
So we have a big announcement today. I'm not allowed to announce it right now.
Yeah, Paul is the worst at teases.
I'm not allowed to announce it. We do have a big announcement. It's going to come at 1:30.
1:30, guys.
So
27 minutes. Ooh.
27 minutes from now, we have a big announcement.
Huge announcement.
Why is his mic not working? People are saying this. Whose mic?
It's literally working. Make sure
Is it my mic?
Is my mouth by the microphone?
I can hear you.
Test.
Test.
I can hear you.
Testing 1, 2, 3.
And I hear him. Great. It's Damon. You just gotta make sure you're
Oh, just right here.
That's what it is.
Oh,
Right
gotcha.
here.
Okay.
Can you guys hear me now? Can you?
You did not miss the announcement, Jesse. We are coming.
All of them are fine. Thank you, Spicer.
Matt Jensen just said, "Can Damon announce my entrance at meetings?"
I got you, Matt. I got
So
you.
we have this big announcement coming. It's really, really exciting. It's coming in 26
Introducing.
minutes.
Woo, I can't wait.
Damon knows what it is. Everybody in this room knows what
But
it is.
I can keep a secret.
Yes,
I think.
Damon will keep a secret. I will not. I do not want to keep a secret. I'm just going to announce it right now. Piss off everybody.
You're so
No.
bad at this.
It'll be your reward. Everybody out there watching, it'll be
Paul, this is
your
what show business
reward
is all about,
if you
teasing.
hang out for 26 minutes and have some fun with us.
But I have these rules, like for surprises. I always tell people, don't tell me, "Hey, Paul, I'm working on something," or "Hey, Paul, I got you a gift." No, you either give it to me or you don't tell me about it, and then surprise me with it. Because if you tell me, I'm the curious cat. I'm like, listen, tell me right now, or else I'm going to fire you or kill you.
Oh no! Delays of gratification. That's what we're doing.
Not for me.
We're on the edge of our seats because it's worth waiting around for, guys.
And by the way, Seth still has. For those of you asking, Seth, the big announcement is not Damon is replacing Seth.
No one can replace
Seth is just on a permanent vacation.
Seth
I mean,
is
just
awesome.
on vacation in Myrtle Beach.
If I can grow my beard like Seth, then maybe
Yes.
I'll try.
All right, so we have.
You got a pet bat.
Who is the charity today that we're working for?
So today is going to be Halo No Kill Rescue. So these guys are in Sebastian, Florida. They do. They don't kill any animals, and also when they come for like pest control, which you have a great story from last night. They do not kill those pets either. So this is a great charity. I love this stuff. I think everybody in here loves animals. So
Very
last
much so.
night, I should tell a story.
Yeah, I got
Last
another
night,
story. I have to.
I'm
know
on my
the story.
couch. I'm reading a good book.
Okay.
That food book is a great book, by the way, Mo.
Yeah.
You got to read it.
Is that what you were reading? The food book?
Yeah, the food. It's not called the food book. It's called what was it called?
I don't know.
What to eat and when, or something like that.
I like the title food book.
Yeah, food book's better.
Okay.
I'm sitting there reading. Dogs are behind me, and all of a sudden, bat flies right across my face.
Oh.
I freaked out, and it starts circling the room and circling, and I'm like, and I'm not kidding when I say I was freaking out, like literally screaming. Guess what the dogs
Were you
doing?
screaming like a girl or
Yes.
like screaming like a
Is there a
grown
way
man?
to scream other than like
Like, ah!
Dogs did nothing. They didn't see it. Nothing
really?
happened. Bat goes around the room 3 times and then goes down the hall. So I get up, I close the door, and I just start texting everyone I know. Do you know anybody? Do you know anybody? Do you know anybody? Like, do you know anybody? Come remove a bat. So somebody said to me, "Listen, you got to go find this bat." And I was like, "Okay." So I put my blanket on me. I put like a little area that I could see, and I walk down the hall. I'm walking down the hall. I get to the staircase because everything is well lit except for the staircase, and bats don't like the light, right?
You need spooky music behind this.
I should have done that, but unfortunately, so the dogs, I put the dogs outside. No, I had the dogs in the room, the living room. I see the bat hanging from the curtains on my stairwell.
Oh.
So, you go to the landing, there's a staircase right there with curtains right there. So the bat's hanging there. It's disgusting.
Just hanging out. That's all he's doing. Just hanging out.
By the way, this happened at 9:15. Finally, at 11:30, Mary, our manager upstairs, her husband Doug, and her son Christopher came over, and Doug brought 2 nets, and I was recording it, and then the bat started to squeal, and I just lost it. I left the room, and Doug got the bat to safety, but it was literally a 2.5 hour endeavor.
Well, that makes you Batman.
I was just making Batman.
Exactly.
my contribution to helping him was sending him funny GIFs of Dwight Schrute putting the bag over Meredith's head with the bat inside of it.
Yeah, that was good. So either
I was
way,
like, I'm going to bed.
tragedy has been avoided. I was very scared. I mean, it was literally, so I go upstairs.
That was disgusting.
I had to find a different way. I went a different way upstairs, and then I was opening like the door from my master suite to the staircase, and I just kept looking to make sure the bat was there. It was awful.
Aw, maybe he just wanted to become a value investor.
Yeah, maybe he did.
just wanted an
He
opportunity.
doesn't have what it takes. All right, so Damon,
Present.
tell us a little bit about what you do with options.
So I am a student. That's what I like to say. I am here to learn as much as I possibly can to make the most of what we can do out here. And I found my way into options investing about 8-9 months ago, and I saw how confusing it was. So I made a point I took a couple of trading courses through my brokerage, TD Ameritrade, and figured out how powerful these strategies are. So these are essentially the tools that you can use to build a masterpiece. Essentially, for every stock that you buy, if it goes up by $1, congratulations, you just made $1. But if you happen to have an options contract on that stock and it goes up by $1, you just made $100 or so. So that appealed to me, and I wanted to understand the good, the bad, the ugly behind it. Lo and behold, 6, 7, 8 months later, the returns are amazing, and I want to figure out what this value investing about. I mean, why value invest, Paul? Why not just go YOLO on AMC, Diamond Hands, print some tendies, you know, Mo?
So Damon at lunch, he was explaining to us the tendies and the diamond hands and the YOLOing. I didn't know any of this.
I didn't know the diamond hands thing at all.
All right, I'm going to teach everybody, just so that you guys, your Wall Street bet-seeing lingo is up, okay?
Okay.
So first of all, Wall Street Bets, popular Reddit group, they're the ones mostly behind the whole GameStop short squeeze and all the hype stuff that you hear about. If it made it to the news and you heard about it, Wall Street Bets is probably behind it. And there's a lingo. I'll be your translator. First of all, diamond hands. Ta-ta! Diamond hands. That means you know how to buy and hold forever. Regardless of whether it's a good idea or a bad idea, you hold. Paper hands. Just the opposite. You sell at the first chance and you're a little scared. Generally, it's frowned upon to be paper hands. There's also the YOLO. You only live once. But when Wall Street Bets, they say YOLO. That means if you have $1,000, you put all $1,000 on one play. And you hope and pray. That's the way you invest right there. All $1,000, everything on AMC because it's going to the moon. GameStop to the moon.
Somebody just said, I'm a diamond-fisted space ape.
There you go. See, that person knows what an ape is.
A what? A diamond-fisted what?
Space ape.
So what's going to the moon?
We've heard that one
Yeah.
too. Yeah.
I've not heard that one.
Yeah.
Well, that's when the stock is going to just take off. It's going to the
By
moon.
the way, look at my shirt.
There we go. Can't stop, won't stop, gain stop.
I thought somebody. Oh, did we not have it on here?
Go ahead. Go.
I like
Can't
that
stop
shirt.
once. I love this shirt, and I also have one that says GME to the moon.
So there you go. So Paul, you have diamond hands.
I don't know about that.
Are you proud of your diamond hands, Paul?
I'm not proud of
Don't
my
be in
diamond hands.
denial. It's okay to have diamond hands.
I literally saw this shirt. I'm like, okay, must have. Who found this shirt for me? Was it you?
Jensen.
Oh, it was Jensen. That's
Yeah.
right. Oh,
All right.
poor Matt now is going to text me and go, why don't you give me credit for anything I send you? It's going to be awful. That's so sensitive.
Oh, and last but not least, guys, the goal is to print some tendies. Chicken tenders, right? Which represent you making profits from your position. So there you go. There you have it. I'm your translator. You're welcome. Thank me later. You guys know what to do. And from now on, if ever you hear the word diamond hands, that means you got to like. You got to hit the like button at the bottom. If you now understand what this stuff is going on, the lingo, just tickle the thumbs up button. Show us that you're enjoying the material.
Matt said he didn't send you that, Paul.
I think he's lying. I think it was
is.
Matt.
He doesn't remember. I remember. All right.
Okay, so let's do.
Drum
So
roll.
I will be honest with you about something. Can I be blunt about our conversations?
Yes.
We had a lot of conversations. So I said, we asked Damon, hey Damon, do you like hype stocks? He goes, no. I go, oh good, what stocks do you like? He goes, Tesla, Palantir,
Oh, yeah.
ChargePoint.
Oh, yeah.
And we're like,
The
he started
good stuff.
And he started listing off some Bitcoin or cryptocurrencies.
So you love hype. You're like, oh, I guess I do like hype.
I love hype then. So it all comes down to defining of terms, right? What's hype, what's not? I think you're pretty hype, Paul.
I am pretty hype.
See, yeah, there we go.
Okay, so let's pick. What was the company you ended up picking? Oh, P&G.
Procter & Gamble.
Procter & Gamble. So this is a-
PG.
So this is a great company to do because it's such a stable, listen, nothing can get more boring than a company that makes home products like this, right?
Yeah.
I mean, it's pretty much the most boring thing you could possibly imagine besides
Boring is good.
Boring is good in the world of investing because if it's boring, people don't like it. They drive down the stock. But if the earnings and revenue keep increasing, you can buy it at lower valuation metrics. So we're going to start with this. Now remember, guys, Damon's new to the whole 8 pillars.
I'm brand new.
So
Go easy on me.
So he doesn't know the order of everything. We'll guide him along the way. He wrote them down, but we're going to go easy on him. Let's not tell him, like, Damon, come on, what are you doing here? But he'll guide along the way.
Don't be mean in the chat. I'm a nice guy, I promise.
But I also want Damon to ask questions as we go along, the things that he's thinking about, because it tends to be things that other things that people are thinking about as well. So P&G, $340 billion market cap, 23 PE, that's an X.
Uh-oh.
Because it's greater than 20, and 19% profit margin is a check.
Nice.
So my initial reaction is, why is such a boring company selling for such a high multiple? You might sit there and say, well, Paul, 24 is not very high. It is. But that's why you have the stock analyzer tool later. Dividend yield. Now, Damon, I know you've watched a few of our videos. Do you remember why I look at dividend yield so much?
Oh, to make sure that the company can cover the dividend payment?
Bam!
Thank you.
Somebody's been watching his Everything Money videos.
Guess what? I'm subscribed. Are you subscribed?
So that's awesome. So here, $7.8 billion in dividends. Last year's free cash flow was $16.3 billion. Plenty of cash on hand to...
so they can pay that dividend.
They can pay that dividend.
They're not going to do the AT&T on us?
They're not going to do the AT&T. That's right.
I was a little sad about that.
Guys, I'm surprised about this. Return on invested capital and return on assets, pretty high. Do you see this? 12% almost for both of them.
That. Woot.
So they do a good job investing their capital. So far we have 1X, one check, but a couple other good things here. All right, Damon, what's the third metric?
The third metric is to revenue growth over 5 years.
Great. 65 billion, 75 billion. That's a check mark.
Hey,
now
they're going up.
What was that?
They're going up.
They are, but with a company like P&G, look at this back here. They did 84 billion in 2012. So what probably happened along the way here is selling assets and maybe buying some assets. So maybe they're selling divisions of their company. Because a company like P&G to lose 15, 20% of their sales in 1 year, that's got to be because of they sold something off.
That's a special situation.
Yeah, it can't be because, people aren't buying 25% less home good things like it's
Less
just not happening.
toothpaste, you know?
Right.
Yeah.
Right.
So I would look into this also to make sure this growth, because if you look at this growth, it goes minor growth, jump. Figure this out. Now this year might be because everybody stayed at home, so they're using more home products.
Makes sense.
Could be.
Right?
Or stocked up. Bought double of what they needed last year.
I brush my teeth 4 times a day now. In a
Or that.
Say
So do
swear,
I.
do you really?
Oh, no, not really. But during
brother
COVID,
brushes-
you know, I
Oh,
was
does
looking
Mikey
around.
brush
I'm
his
like,
teeth?
Mikey
6
brushes
times?
his teeth at least 5 to 6 times a day.
My brother
brush
brushes his teeth like 5 or 6 times a day.
3 to 4, and Mikey is double me.
wow, that's impressive.
And Tim and I brush our teeth once a day combined.
You brush maybe half your mouth, and he brushes half his mouth.
Actually, we just brush each other. I brush
There we
his
go.
teeth.
See, that's combining.
He brushes
There we
my
go.
teeth.
We share a toothbrush.
Tim said we share a toothbrush.
All right, net income growth, 15 billion down to 14 billion. That's an X.
Ooh.
Yeah, by the way, if you look last year, 15, 10, 11, 5, 14. So they clearly had some outside situation here.
Something happened.
Let's see, there's a write-off somewhere. Oh, right here. $7.8 billion write-off.
What line is that you're looking at?
Other income and expenses.
Other
So this is what we
income
look at when we're trying to figure out when there's like big jumps or big drops. Now, go find out what that $7.8 billion is. They probably wrote something off they invested in. That should be added back in because it's not a consistent thing.
So we're not going to
We're not going to penalize them
That's
for
not
this.
going to deter us from them.
No, it would deter us if it was a consistent thing. Every single year they have some big write-off. And I'd be like, listen, these
okay.
guys suck
Something's
at
up
investing, so we got to factor that in there. But I'm not worried about that right now. Shares outstanding. Okay, Damon.
There's no way that they're diluting.
Yep, they're check marked there.
Okay, good.
Right.
Damon, explain to me the shares outstanding issue.
So when a company IPOs, right, they put all those shares out there, and then
Yeah.
everyone gets to play tag and jump rope with those shares. And then they have the opportunity to buy those shares back over time if
Or-
they choose. Or they can offer more shares to try and raise capital for things like other investments or reinvesting in the
Wow.
company. Is that true? Am I there? Am I
Yeah, I
there?
was not
I have an
expecting him to
announcement
go
to
in this
make.
direction.
I have an announcement to make. Seth, you're fired.
No.
I'm just kidding.
So when they dilute shares means that they are putting more shares out there, meaning that if you owned a share before, now you own a little bit less of the company
That is
percentage-wise.
correct. So you're
Wow.
diluted.
So you become a little sad.
It took Damon one lunch to understand that concept. It took Seth 547 episodes. By the way, I'm totally joking. We love Seth. Seth is the best human being out there. It's just funny. You know, years ago, I'm gonna tell you a side story. Years ago, 20-some years ago, I went to a Blink-182 concert. I took my brother.
Blink-182, woo.
They're the jam, right?
Did you spike your hair, Paul?
I did not.
Oh, you missed
We
it.
were at Blossom. Out they come, and they said, we have a bad announcement. Our drummer, what's his name? The guy who's dating Kardashian, broke his arm. He was at the Taco Bell in Cuyahoga Falls, got in a fight, got his arm broken.
Ouch. Did he win the fight?
I don't know.
I mean, broken arm. Ugh.
But they brought the drummer of the band that opened for them. The lead singer of the band that opened them was also a drummer. He came out and drummed. And he was doing way better than that guy was. His name Trav. So they were joking like, oh yeah, we're not going to have him come back. And then he finally made his first error, and they made a big like hoopla about it. So it's kind of like the same thing. We have a stand-in here for Seth.
I'm just
going to tease him.
I'm a sit-in, actually.
Yeah,
sitting down.
sit in. That's right.
There
So
we go.
anyhow,
Any of the stuff you guys talk
so
about.
let's go back to the pillars. Now the balance sheet. Damon, what's our next one?
Total current assets, are they greater than the total current liabilities?
22.6 versus 32. That's an X.
Uh-oh.
Now,
They
a
can't
lot of
pay all
times,
their-
but a lot of times these companies that have a lot of home, they do a lot of things on credit and things like that.
Mm-hmm.
The key to that is it's okay if it's in the negative. Just make sure it's a consistent business model. Go back every year and see if this is consistent. Go back the last 10 years. If every single year it's less than, that's just the way they do business.
Okay.
I mean, you can get more into it to understand why that is, but I'm not as worried about that for a big company like P&G. I'm more worried about that with smaller companies and all that stuff. So, all right, free cash flow. Free cash flow
This
growth.
is the Paul special right here.
The Paul special.
You can't get this anywhere else unless you are subscribed and you've liked this video.
This is the line that I've added, kids. 9.68 to 16.3. That's a check mark with an average of 12.35 times our magic number of 20. Call it, what am I doing? $250 billion.
Now, I have to ask for
Yes.
all the beginners out there like little old me, why 20? Why not 25? Why not 15?
And by the way, folks, I did not prep him with this question.
Great question.
We did not prep him with this question.
asked a good question.
He added it on his own. Here's why 20. When a company's free cash flow is growing, but I want to look at a long-term average, I want to buy under 15 for the last year. But if I'm looking at a 5-year average, as it's growing, I don't want to diminish the value of the early years exaggerate the value of the early years, but also diminish the value of the recent years. If it's growing, I should want to pay a higher multiple for a lower average.
Makes sense.
So that's now 20. Is that the right number? I don't know, but it's a starting point.
It's the Paul special.
Correct.
Okay.
The goal here is to start at for 8 pillars. To start here on the 8 pillars and see where it goes. So here it's 250 billion. So right now the company is overpriced, right? Because the company's stock is the company's current market cap is 335 billion or something like that. Okay. So Mo, why don't you take it away on your charts, and I will do the stock analyzer tool.
Funny comment here. Does this Paul dude see numbers when he closes his eyes at night? When he was a kid, he used to fall asleep, and to fall asleep, he would just see numbers, and that's how he would fall
Well,
asleep.
I wouldn't see numbers, but I would do. But I will say
math
this
in your head.
I do numbers
fall
very
asleep.
well, right?
Yeah.
And I saw an interview with a guy recently.
Funny they said that.
But it was years ago, but a guy who was very good at math. And they said, hey, how do you do math so well? And he said, well, I see numbers in a pattern in my head. I'm like, well, yeah, so do I. I thought everybody does.
Yeah.
Like, you don't see numbers like in a certain pattern?
No.
I do.
No.
Like, numbers have a certain path to me. Like,
Yeah.
I could draw it.
They tell
And
you a story.
I mean, in a way, they're just a path so that it helps me skip steps.
Yeah, it's
where I
crazy.
know like 1 to 10 is a certain way, 10 to 100 is a certain way, 100 to 1,000 is a certain way, 1,000 to 10,000, 10,000 to 100,000, 100,000 to a million, million to 10 million. It just goes in a path, and I just thought everybody did that. And then I read this, the guy's like, the guy was way better at math than me, but when he said that, I was like, oh, well, maybe that's why I'm so good at math. I just happen to always see it in a certain way.
Maybe so.
Okay.
Your brain's a
Anyways,
computer,
Wait,
Paul.
these comments are nuts.
Yeah, the comments are pretty good. You're not on mic, are you?
No,
Okay.
like, so they're saying like Seth's dead. And
Oh, no.
Seth is still here. All right, guys. So with Procter & Gamble, if we just draw, I mean, you can see that this thing has been consolidating for, where am I at here? This is going back to August of last year. So let's see. I mean, when you get a stock like this, there is not a lot of room for it to grow. Now, with that being said, the stock price right now is 137. It can maybe get as high as 146, its previous all-time high. But
Whoa.
even with it being in the sweet spot, I mean, look at how this thing has grown. It's grown a dollar, what you could have added to it. I mean, there's just not a lot of growth on companies like this. Definitely don't day trade these. If you want to try to play them long term, these were the ones back in the golden days of like 2015 on charts where you'd see 3 movements of a stock. Let me show you. Let me go out a year and just show you what you would see. On this stochastic, instead of it being a hot mess like this, you would see 3 movements. You would see it up through the stochastic, down, up, and down. And you could go long, short, long, short, long, short. And you would have 3 great cycles through the year. And a company like Procter Gamble or AT&T or something, it was so good at being able to capitalize on those opportunities. Those days for now are gone because of stock buybacks, because of the volatility, because of just because of the craziness of the markets.
Right.
So eventually those days will come back, and Procter Gamble will be a great long-term stock where you can hold it for like 3 months straight. You're just not going to see that right now. So my advice is move on to something else, and then that's that. Go to Stock Analyzer.
All right, so guys, remember, Stock Analyzer is about your assumption. You have to sit there and put your assumptions in. Once you have your assumptions in, it'll tell you what you should pay for the stock. What are these assumptions based on? That's the art of investing. We don't know what those assumptions are based on. And I keep repeating this over and over.
Garbage
So I
in,
want you
garbage
guys
out.
to use the Stock Analyzer tool for what it's intended for. You need to make your own assumptions. For a company like Procter & Gamble, for a guy like me, who's a value guy, I want to make very low assumptions. I assume 2% revenue growth, 3 and 4. Why? Guys, it's a huge company. I don't see it growing much faster than the US economy in general, right? So I assume these things. My buyback rate, one of the things I want to talk about here is the PE. I actually put a low PE on these things. I'm probably going too low on this, and I'll change this as part of my second analysis. But I look at this saying, this is not a fast-growing company. It's not going to grow fast. I need to make my money some other way. How am I going to make that? Paying less for it, okay? That's how I make the money on this thing. So I put a low PE here. Hit the analyze button. Guys, the stock is overpriced. No shocker there. 40 to 92. So this isn't telling you have to pay 40, you have to pay 92. It's just basically telling you the stock's at 137 right now. It is clearly overvalued. Now, for those of you who say to me, Paul, you're being too conservative. Okay, I will be less conservative.
Uh-oh.
I will
It's
sit
gonna
there
get
and
bold
say
out here.
4, 5, and 6%, which I think is still too high. Because look at 4%. And let's go PE of 15, 16, and 17.
Saying
big
there's ever
numbers,
going to be like insane growth on a company like Procter Gamble is actually comical.
Yeah, this kind of.
Exactly.
It's comical.
Guess what? I increased the PE, the price of free cash flow, and the revenue growth, and guess what? Still overpriced.
Whoa.
So you use this and saying, wait a second, I'm making much more aggressive assumptions that haven't even occurred in the last 5 years. And I'm looking and going, yeah, I just don't see it happening. Even the PE. Let's assume the PE goes to 20, which guys, if you're paying a PE of 20 for this company, I don't get it.
No,
It's still not worth it.
No.
You're still stuck at 112. 20 times earnings. So the bottom line is, guys, PE is overpriced. PG is overpriced. That's it.
I like what you're doing here because every day we as investors and hopeful people trying to print some tendies. Yeah, you got that right. We're trying to print some tendies right now, and we're trying to figure out, well, not just what to buy, but when and where to buy it, right?
Yeah.
I mean, would you pay $10 for the iPhone 12? Probably, yeah. But would you pay $10,000 for it?
I love the analogy, David. I love the analogy.
Probably not. So
that's exactly it.
I like this. So, by the way, so behind you, Paul, you just put all this stuff in your magical time machine there. Can viewers access this?
Of course, it's on the software. Everybody here knows this. Oh, not that one. Guys, sign up for the Everything Money software. It's 80 cents a day. It gives you all the software, all the editions, all the news. But what time is it?
Well, it's 125.
I was going to say.
Man,
Actually,
Paul.
no, you got to follow the rules.
Hold your horses.
Follow the rules.
The announcement is software related, though.
Buy and
rules.
hold. This is what we're doing.
So
okay?
sign up for this. It's 80 cents a day. It's going to $50 a month at some point here in the near future. Guys, we're growing like crazy. As time goes on, a higher percentage of our subscribers buy the software. We're at like 8% of people. Don't be like one of the other 92% who doesn't buy it. It's an incredible software. If you're serious about investing, it has all this stuff. So,
You know, think about this, because this is what's hitting my brain right now. And maybe I'm speaking for people who are more beginners like me, but what was the quote? Price is what you pay, value is what you get.
Yep.
So the question is, what type of value are we receiving for 80 cents a day? And I imagine, from what I've just seen right here, you're telling me that I'm not going to just throw money away here. I'm going to understand where my money should go and when.
Yep.
And that's a return in itself.
Absolutely. And we're adding options to this at some point in the future.
I like options.
We're adding international exchanges right now. Tim, what exchanges did we add recently? It was Canada?
Yeah, there's so many. It's
We added a lot of exchanges.
yeah.
It's really good. You don't have a mic there, do you?
We're still waiting on like London. And
London's
Tokyo.
coming. Tokyo's coming.
But as we speak, they're working on adding some new ones today. I think like Oslo is getting added today.
Whoa, that's intense.
Germany.
So listen, like Damon said, great point. The value here is immensely over 80 cents a day. If you even have 5,000 to invest, 80 cents a day is nothing to make it better for you, making more informed decisions. Short run might be hard. You won't see the hype, you won't see excitement, but long run, you'll do very well, make your money many times over. So who is our first, remember guys, $50 for a stock request. Do we have any yet, Tim?
All right, you guys have a chance of a lifetime right now. So what's going to happen here is we are in the presence of Paul the Great. And with everything money here, anyone in the chats and the comments over here has a chance to have whatever they're thinking about investing in analyzed right here live. Not only do you get a chance to see the end result, but you get a chance to see the process. You can see what goes into the madness that becomes magic, right? Chance of a lifetime. So anybody?
We're pointing at something that just happened on here.
Oh, what just happened?
Hey, nothing. Don't worry about it. I don't want to bring it up. Well, I'm sorry, Damon. Could you please repeat the question? I was so caught off by the comment.
See, now I'm so curious. See, now I'm on the edge of my seat now. I want to know.
It's 128. Can I just do it?
Wait. Can we get a theme song or something? Oh, we got to do this the right way. Drum roll or something?
Okay, do the drum roll, Damon.
Oh. My drum roll needs a little help.
The big announcement is, the app is ready right now on iOS. So you can download it right now. Look up Everything Money. It says it's by Dynasty Owner. That's our other company. There's a reason for that, but it's the Everything Money app. Guys, remember, we've only tested it with a few people here. There will be bugs. Report them. We love it, but the app is great. Tim did a phenomenal job. Android will be here today, but iOS is right now going on. Guys, we crushed another deadline. I'm not going to lie. I actually thought the deadline was going to be I thought we were going to crush it. I said by the end of the year. I thought we were going to get it to you by September. And Tim already got it done by middle of July.
That's amazing. Tim's awesome, man.
Tim is incredible.
He's a nice guy. Nice.
He's more than a nice guy.
Yeah.
So guys, the app is available. Please go download it now. Everything Money. Use it. Give us an honest review. But I asked one question. If you can't give us a 5-star review, please email help@everythingmoney and let them know why you can't give a 5-star review. Allow us to make it right first so we can earn your 5-star review. It's very important for the channel that we get these good 5-star reviews. We get it that things happen, but please give us an opportunity to earn that 5-star review. If you're just going to complain to be a complainer, keep your hate at home. But if you have, hey, listen, there was an issue here and I feel like it's not, fine, let us know. We're just trying to make it right. But we still want to earn that 5-star review from you because it helps us a lot on the app, on the Everything Money store.
iOS now.
iOS this very second.
Right now.
Android later today.
Android later today. iOS now, Android later today. iOS now, Android later today.
Oh my God.
And the reason
Android later
somebody wrote
today.
in there, the app is the announcement.
The app is the
So that's
announcement.
why we were I was like, who is this person and why? So they must have just guessed it right. So
Congratulations.
Guys,
there we go.
so Damon, you worked with Tim in Shaker, right?
Yes.
Tim's phenomenal because he started with a cleaning business first.
Yeah.
Then I got him to sell it and become a property manager. And now he runs 2 of our tech startups. But Damon's doing the same thing. Damon's a chess coach.
Yes.
And Damon does options training.
Yes.
He teaches people.
Very much so. I mean, it's amazing the level of opportunity there is out there harvesting the tool of options.
Oh, absolutely. And we love options for covered calls and puts, but Damon does it in other ways. Like, explain what an iron condor is.
So an iron condor is an advanced options trading strategy. The way I like to present it, there are 3 or 4 tiers of options, all right? I mean, you start off on the base level, which is buying calls, selling calls, buying puts, selling puts. It's kind of like that, right? And then once you understand the how the stocks work behind it, the tools, you graduate to level 2, which is where you get to the covered calls, and you also get to what's called spreads, where you're combining those 4 different tools together. So a spread, you would buy a call and maybe sell a call at the exact same time, or buy a put and sell a put at the exact same time, depending on what your bias is on what the stock is going to do. And all while making, if you're right on your assumption, you're going to make maybe 100 times what you would make just in buying and holding the stock by itself. So that's level 2, spreads. Level 3 is where you get into the iron condors and butterflies and broken wing butterflies, all these advanced concepts. Basically, they're just getting really creative with those 4 basic tools. Maybe you'll do a credit spread on top and a debit spread on bottom and mush them together. All sorts of advanced principles here, just over the power of options. The way I like to explain it simply, options are stocks wholesale. If you go to Costco, instead of going to Giant Eagle and buying one bag of Cheerios, you go to Costco and you get a huge bucket for maybe a discount. It's kind of what options is. So it's pretty amazing. So when you combine options investing with everything money and the fundamental analysis, you're like, well, I have the tools of options and I know what to use them for to build a masterpiece. And with everything money and the new app, you'll know, hey, well, this is the price point I'm supposed to get in at. And it just all comes together to make a rainbow.
So we haven't gotten into this yet, but one of the things he talks about here, we're talking at lunch about how you can basically own shares for 1/4 the cost. There's a lot more risk involved, guys, but somebody who we talked about options always called it synthetically owning shares. Like, I remember I said when he was teaching us, I'm like, wait, then why buy shares? It's like, exactly. You can use, now with leverage comes risk. Let's not forget that, yes, he's speaking about making 100 times your money, but it can go the other way too. Now, when you're selling, there are risks involved. And as time goes on, we're going to bring more options to the platform. But knowing my conservatism, I want to bring it in a way that's very much teaching about different strategies to use, but not putting your bulk of your money into it, because with big risk can come big rewards, but also big losses. So we sit there and try to do it a little bit different. I personally only focus on selling puts and selling covered calls.
Those are amazing. Those are honestly, if I were to say only 2 option strategies to use, period, is what Paul said, selling puts, selling calls. In the stock options world, we call that the wheel strategy. It's absolutely amazing. If you're just even slightly curious or your interest has been piqued, do a quick Google or a YouTube search for the wheel strategy, and you'll see how amazing it absolutely can be. And then there's also the notion of what Paul was referring to, the synthetic selling of calls. We will call that the poor man's covered call. And that's an amazing option strategy as well. Of course, there are risks with everything, and you want to weigh your risk. There's a risk when you get out, wake up in the morning, you go and drive your car. There's a risk there. So never be blind to what the risks are. But by all means, the power to succeed there is very much there as well.
Good. So, by the way, it's something we had talked about, Tim. I want you to write down because somebody did mention it. I think we talked about it once before. I just totally forgot to follow up. Talked about changing the number of options, assumptions made.
Just taking a picture of that and sending it.
Great. Because it is true. Like, sometimes people won't want 3 options. They're like, listen, let me just put my one.
I felt that way too.
I like the 3 because it allows me to go give myself a range on what the stock price would be. For those of you who want to go back, you got to swipe. Swipe left to right from the edge of the screen over. That's how you go backwards. Go back to the previous screen. So anyways, have fun with it. Let us know. It's working a lot of ways. I'm sure there are going to be bugs in there like all new software. So do we have any donations yet for any stocks?
I've not seen one come in yet.
Guys, $50 gets us to talk about any stock you want. It goes to Halo, the group that helps
No Kill Animal Shelter.
No Kill Animal Shelter in Florida.
What it's amazing city? Positive calls.
Sebastian.
South Florida. South Florida?
Yep.
Okay.
Well, I have a question about an app, about a stock then.
Let's hear it.
They just had earnings, was it yesterday? JP Morgan, JPM.
Oh,
this morning.
They made $6 billion last quarter.
Crazy.
So here's the deal about JP Morgan. Glad you asked. I don't look at banks because banks have a different way in which they, as Gary Mashuras, my friend and value investor.
Somebody just put in JP Morgan.
Hey!
What was that? Somebody just put in JP Morgan.
Robert, pick a different stock. I don't do banks, and here's why. My value investor friend, Gary Mashuras, doesn't look at stocks either. I asked him once to teach me. He said, Paul, I don't look at them. I don't even think bank CFOs understand the free cash flow of a bank. So if I don't understand something, I don't look at it. I don't do banks, utilities. What are the other things I don't do? Insurance companies.
Insurance.
Okay. No Aflac.
Yeah, because they make money. Energy, I don't do it. I don't like to do. I understand energy. I just don't like the fluctuations of commodity prices that make that go up and down. But for insurance companies, the way they make money is totally different than having a service, having a product. There's a direct cost. It's like a long-term. You have to look at their long-term investments and things like that to understand where they stand.
Okay. Ooh. Well, are there any suggestions yet? No.
We're waiting on Robert.
Okay.
I'm sorry.
Well, how about this one then?
Yeah.
Another hype stock, possibly. You ready for the hype
Let's
stock?
hear it.
Space. He
all right.
touched the moon almost.
Well, look what space just did. First off, there's not going to be any.
So
Virgin
Yeah.
Galactic, right?
Yeah,
SPC.
Virgin Galactic.
They're not going to have any income statement.
Are they that new?
It's interesting
yeah.
because they literally went to the moon and then their stock didn't go to the moon. So I think that's pretty funny.
Okay, so let's go look at their annual numbers. Ready?
It's down to 39 now. They were just at like 48 yesterday.
Doesn't matter to me. You know what matters to me? Lost 138, lost 210, lost 645.
Ouch.
But look at their revenue. Their revenue was $238,000 last year. Not million, not billion.
Oh.
$238,000 last year.
So you're saying they still have diapers on? You know?
It's just way too small. But guys, look at what happened yesterday. They announced $500 million more in shares. What happened to the stock price?
Ooh,
Fell 8%.
They
That
diluted the
happened.
shares.
They
huh?
diluted it like crazy. Now,
That was yesterday?
That was yesterday.
Yeah, this. Like, look at that big
I
drop.
was wondering why that big red bar was
Look at
there.
it from a
48
trading
bucks.
perspective, because I'm sure there's some interesting trades out
Yeah,
there.
I mean, this one, it's coming right through the sweet spot in the downward direction. So this might be a possible short that you can maybe take to this, oh my God, I don't know, $16 level or something.
Oh,
but
man.
this is one of those ones where you can go and day trade the hell out of this thing. This would be perfect for it because it has that crazy volatility. There were a lot of people in the bid and ask nation that were making some of their best trades of this year on this yesterday and going last week and whatnot when they were talking about going to space or whatever
Yeah.
they did. So this is a good one for you. Just make sure you're using stops. Make sure you're protecting
Always
your
set the
butt
stops.
but day trading for sure on this one. I like it.
Ooh.
Yeah.
Yeah, so from a fundamental standpoint, everybody knows
nothing there.
how I feel about it. There's nothing fundamental here. By the way, I have my deposit in. Everybody relax before they make the rich guy comments. I put a $250 deposit down for
Wait, how
Virgin-
much of a deposit?
$250.
Just $250.
That's all it was.
$250,000?
No, $250
just $250.
to get my spot in line for the Virgin Galactic space flight, because I do have an interest in going to space. Mason will now make comments in the chat about space being fake and me being an idiot for liking space so
So,
much. It's an ongoing joke.
I gotta know, how much are tickets total?
I think it's
Probably 125 plus.
something like that. Let's see what it is.
I mean,
125.
I've seen 125,000.
$1,000. Okay.
Yeah.
I was like, I might be able to
Yeah.
afford $125
I'm not going
with
I'm
a
not
$250
a
deposit.
space person.
You don't want to go to space?
How much will it cost?
Guys, somebody asked about the back button. So the back button, it's swipe. Grab the side of the screen and
$250.
swipe. It's all.
Actually have the back.
We did have the back button. I wanted to get rid of the back button. Then I wanted to keep the back button and the swipe option. But we have it right now is just the swipe option. So that's how you go back. Welcome to 2021.
Is there a swipe left and a swipe right?
There's just
not.
a swipe right.
Speaking of swiping left and swiping right, if no one has up there, what about Bumble?
We do.
No, we do.
There we go. Okay.
Tegna?
We have three.
Oh, great.
Ooh, nice.
ALE.
This is what do they do?
This is for Robert.
Iron ore
What are we doing, Vale?
miner.
Robert, yep.
Oh, I've heard of Vale. Yeah.
Have you?
Yeah, this
I
is
have
a
not.
big one.
All right,
People
guys, let's take a look at this. $115 billion market cap. Whoa, 11 PE. Check mark with a healthy profit margin of 22.3%.
Oh, nice.
Damon, 5.3% dividend, $6 billion paid.
Whoa.
Free cash flow last year was $15 billion. Plenty of money on hand. Only 40% of their free cash flow last year went to dividends. And return on assets, 11.9%. Kind of a low return on invested capital, but this is a 5-year return on invested capital. My guess is it's a commodity-run business. As commodity prices fluctuate, their income and revenue will not be very consistent. Let's go see if that's true or not.
They're at 22.44, so affordable.
So let's see here. Revenue, 27 billion, 39 billion, check mark. But look at back here. Look at back here. I bet you iron prices were a lot higher back in the early 2010s.
Okay.
Right? So, by the way, Damon just said the stock is affordable.
Is it though, right?
Right, but from an options world,
Oh.
you would much rather have a lower nominal price on the shares because you have to buy 100 shares at a time for a contract, right?
So if you want to do a covered call, then yes, you
Correct.
have to own 100 shares.
Correct. If you do the...
If you're doing the poor man's covered call,
Yes.
well, that's a two-step process where you...
Can you explain the poor man's covered call real quick?
So instead of buying shares, you're going to rent them. So for example, with Vale here, if you were to buy 100 shares of Vale, you're out of $2,200.
Yep.
However, if I wanted instead to rent 100 shares of Vale, I would go and buy a call option or open a long option, as we would call it, a long call. And those prices fluctuate because you're not just renting those shares, you're renting them with the option to buy. So think about it kind of like an apartment, or a condominium where I'm renting it now. I might want to purchase this later.
Right.
So depending on your eventual purchase price later will determine how much you're going to pay right now for this contract, for the ability to rent those shares. For the poor man covered call, you would first of all open what we call a LEAP, which is a long-term equity anticipations security, which means you're going to buy a call option that expires at least a year out. And however much you're paying for this long call, you want to also add that to what would be your strike price. To be clear, a strike price is how much I would eventually want to buy these shares of stock. Mm-hmm. I don't know if you guys have an options chain that we can pull up, but as an example, with Vale here,
let's just bring an example. Let's just sit there and say it. Let's say the price right now is $22.
$22. So what I would do if I were to open a poor man's cover call on Vale, which I'm thinking about doing as a matter of fact, I will look at the options chain. Immediately, I will go out to 2023. As a matter of fact, I'm going to pull up.
Oh, that far out?
Yeah, I like the idea of having more time because the market is crazy. It's going to go up. It's going to go down. Yep. There's going to be pandemics and Paul's going to go to the moon. These things are important. So I want to have time to weather the storm. So I'm going to pull up. So for Vale, if it were me, I'd take a look at the options contract here. Yeah, okay. So I would put an expiration of maybe January 2023.
Expiration.
Yeah, Damon goes out.
I do. I like the amount of time. And then again,
you're buying this option.
I would buy this option. But now the strike price
yeah,
that I would go for, if it were me, would probably be an $8 strike. So again, for those of us who may be new to options trading, the strike price is what you have the ability to buy 100 shares of stock with. So if you want to buy, if you want to exercise your right, as we call it, but you're renting with the right to own. So if I want to own 100 shares of Vale, I would pay $8 per share whenever I want to.
At the strike price?
At the strike price.
Okay, what would that cost you to buy
So the cost to buy that would be $1,455.
So let's do it per share.
So $14.55.
Okay, guys, so what this means is you're basically paying 55 cents in time value because it's $22 minus an $8 in the strike price equals 14. They're assuming 55 cent cost on this. If at any time between now, so at the expiration date, if all of a sudden the stock is at $10, you have the right to buy it at $8.
At any point in time I want to, I can exercise my right to buy.
At any point in time.
And I would buy for $8.
Correct. So the goal here, though, is if it ends up above $22, it's got to be $22.55.
Exactly.
And then all of a sudden you start making money. Let's say the stock's selling at $30.
Right now the stock is at $22.36.
To make it easy, let's say it's at $30 on January 2023.
Okay, yep.
You have the right to buy it for $8. So you're buying it for $8. You paid $14.55. You're investing $22.55, and the stock's currently at $30. You just made $7.45.
Yep, $745 and.
Sorry.
Actual math. No. He's correct. And
that's over a year and a half, though. Mm-hmm. That's over a year. So now instead of the stock going from 22 to 30, which is roughly 33%, you have your investment go from $14.55 to, $8. Wait a second, $14.55 all the way to $30. Is that right?
I'm almost with you.
Yeah, you doubled your money.
So that's just the first step. And you can do this. I mean, there are people who just purchase LEAP contracts, which is, again, you're buying a call option and you want to buy what we call deep in the money, which is where that strike price is. That $8 strike, anything beneath the current share price of $22, we call that in the money. And if you purchase it with a very, very low strike price, we call that deep in the money. And the reason why we do that is because all we really care about when you're buying options is the break even.
Yeah.
So the break even would be, as Paul pointed out, $22.55. So it doesn't end there, though. The poor man's covered call adds another layer on top of it. Now we're going to sell calls. We're going to do exactly what Paul does, which is, hey, I now have rented 100 shares. Mm-hmm. I am going to promise to sell my 100 shares to someone who gives me the right price. But I get to choose the price. If I know for a fact that my break even is $22.55, I'm going to promise to sell those shares for maybe $23, maybe $25. And what I'm going to do is I'm going to do that every other week, every 3 weeks, and bring in premium. Because when you're selling a call, you're selling the promise. Like, hey, I promise you, I'll give you what I already have. But for that promise, I get a little bit of money for that. So, for example, if I were to sell a covered call at, let's say, a $23.50, let's go out to August 13th. So 1 month.
Okay.
If I were to sell a $23.50 strike covered call, I will get $44. I will receive $44 in premium.
Okay.
So what I'm doing is I'm reducing
Per share or total?
That'd be 44 cents per share.
Okay.
So I would receive $44 in that example.
Okay.
And now what I'm doing is I'm effectively reducing my cost basis, which is what I really enjoy about
For what
options
strike date is that for?
August 13th.
So yeah, this would be August 13th. $23.50 strike is just the one I just chose randomly.
Okay.
So what would happen is
So August 13th, like as in next month?
yes, next month.
Okay, so every month you're writing a new contract.
Every month I'm writing a brand new contract and I'm receiving premium.
Yep.
Yeah.
So in doing so, since I'm taking in credits, I'm reducing my overall cost basis. So let's say I was a fool and I didn't use the Everything Money app. I'm terribly sad about that because I didn't do my research and my due diligence. I stand a little bit of a chance to get money back on maybe a bad investment because I'm slowly but surely reducing my cost basis over time.
Right.
And then here's the beautiful part. If ever I'm assigned, if ever someone says, you know what? You promised to sell me your shares at $23.50. And they say, well, I want it now. Okay, you can have them.
You made money on your other one.
I made
Right.
money no matter what because my break even was $22.55. So I made $100 there plus the credits I've received over time.
And what if it goes down to $15 on January, let's say hypothetically January 20th. Guys, I want everybody to know, I don't know anything about the poor man's covered call.
Yeah, I don't either.
So
I'm learning
I
with
am
you.
not endorsing this. I'm sitting there saying,
I'm
I don't
learning
mean
with
it like
you right now.
He's explained it extremely well.
Yes.
We need to figure out a way to explain it a little more basic. He's explaining it very basic, but I want to kind of, I
can
just
go
threw him
even
on this. I
simpler,
just
yeah.
threw this on him right now and said, hey,
Yeah.
explain this now.
This wasn't planned.
I can go even simpler.
No,
for
you're
you.
doing great.
We will, but at some point in the future, I just want to make sure that I want everybody to understand, like,
The
this is
risk,
interesting
right.
to me.
Everything.
But there's no such thing as a free lunch.
Ever.
Yeah.
There's
So we have
always
to
pros
understand.
and
So
cons.
what happens if the stock is at $15 on January 20th? So somebody forces you to sell to them for $8.
Close. You're obligated to sell what you already have if you're writing covered calls. So that would be.
Oh,
at
I'm
the
sorry,
strike
you're right.
price.
Yeah, they're not going to exercise those options then. But then along the way, you're forcing somebody. You're not going to do anything with.
So when you buy a leap, so in this example, we purchase an $8 strike call
yes, you're going
option,
to buy
right?
it for there.
So you have the option if you want. So whenever you want to, you can buy 100 shares
For
at
$8.
the $8 strike price.
I see.
The question is, does it make sense to do that?
So
Right.
if it's at $15, you made 7 here, correct?
Yep.
So you made 7 here. You lost 7, ironically, on the other part. No, sorry, $23.50. Oh, but then all along the way. Okay.
So you're selling along the way. The way I like to look at it
so
is
it's not even okay.
if you have an apartment, let's say you open up a second apartment for the entire purpose of Airbnb.
Yep.
Okay.
So I'm leasing an apartment. I don't own this apartment. I lease an apartment. I pay $1,000 a month in rent.
Yep.
But now I'm doing Airbnb. So Airbnb, every other week, I'm generating money for that, $100 over time. So every time I'm making this money. So at the end of the day, in 2023, there's a chance that this entire thing could have paid for itself. And as a matter of fact, if you open the options contract the right way, it will, many times over.
Okay, so this makes sense. I want to do more research on this. I'll probably talk to Damon about this more. I know we got off the topic here because it's Vale.
Sorry
We're
about
talking
that, guys.
Oh,
I
no,
love
it's not
options
you.
trading. It's
I brought it up.
But by all means, it's the tools are
I
powerful.
kind of want to sit down and
And
walk
there
me
are a
through- walk me
couple of
through this
different-
like I'm a 3-year-old.
Yeah, there are a couple of different strategies that I like to employ as an options investor.
Yeah.
Again, my goal has always been to try and make this as simple as possible for anyone to understand because it's really hard to come across this knowledge. So by all means, guys, if ever you want to sit down and chat more about it, or anyone out there, Everything Money, if you like and subscribe to this video, I'm sure we'll have a bit more content on this. And you guys can really see the power here. You will use the value investing, the fundamental analysis by Everything Money, and we'll know what to buy and kind of when and where the price should be. And then we can use the tools here with options investing to really capitalize.
All right, so back to, I've lost Vale. Back to Vale.
Back to Vale.
So the income statement, we're back, now we're on the profit level. 4.7 billion, 10 billion. Check mark there.
Ooh.
Look at last year. They only 2 years ago only made 198 million. Other income and expenses minus. Whoa. So here's an example, guys. I want everybody to look at this. This matters to me. Other income and expenses. I kept saying, make sure it's not a recurring theme. Damon, what do you see going back here?
Whoa, what's
8
that?
billion, 5.5 billion,
billion.
8.5 billion, 12.8 billion, 1.14, 8 billion, 10.3, 7.3. To me, it looks like they have the habit of writing down a lot of assets. So to me,
Of doing what, Paul?
writing down a lot of assets. Usually the other income and expenses, Damon, is when a company's made an investment in something like another business or a mine in this situation, and they realize, oh crap, iron prices collapsed. The mine's probably not worth as much. I'm going to write off a big piece of the mine.
Oh.
Now, when it happens over and over again, I had to sit there and say, listen, it keeps happening. You guys are just really terrible at investing in mines. I've got to factor that in here.
Yeah.
So with commodities run businesses, guys, that rely on commodities, I definitely want to look at long-term averages of income. Because you might have a great year this year, but if you have a crappy year the year before, overall they even out. I definitely believe in that. So even though it's a check here, this is a huge year for the company.
Oh my gosh.
Yeah. Shares outstanding, 5.2 billion down to 5.13.
Okay.
Check mark there.
So they're buying back.
They're buying back
Slowly
some
but surely,
shares,
okay.
a little bit at a time.
You know, I really like, who was that that suggested Vale?
One of our, who's
Robert. Nice, man. Thank you. I might look deeper into Vale. This sounds kind of cool. Robert, good job.
23.2 billion in current assets, 11.83 in current liabilities, plenty of money on hand.
They could pay off everything they needed to if they needed,
Not everything.
if they needed to.
No, not everything. It's just their current assets versus current liabilities.
Oh, okay.
So everything owed within the year.
Okay.
The total liabilities are the other thing. All right, guys. Free cash flow.
Dun, dun, dun. The Paul special.
5 billion to 15 billion. Check mark. 9 billion average. 9 times 20 is 180 billion dollars. This was so long ago. What's the market cap of the company? Anybody know?
We'll find it.
Yeah, give me a second.
Mo will find it.
Mo the man.
Vale.
114 billion.
114 billion.
So this is a check mark there, guys. So
Wow.
it is. Oh, look at this. All 8 pillars.
Oh wow.
All 8?
I didn't even know that.
This is an everything money all-star?
Now, Damon.
What do you do next?
What do I do next? It's
Oh,
not,
that's when you go YOLO. You print some tendies. You some of those diamond hands and you go all in.
No, we do not go YOLO.
Oh, okay.
We do not go YOLO on
YOLOs?
these. What we do is we do more research now. I think it's very important for commodities businesses. I'm not, again, everybody looks at me and goes, Paul, you're too conservative.
Paul, you're
No,
too conservative.
I'm just trying to be realistic. If you were looking at buying this company from a friend, if I said to you, Damon, come buy my apartment building, and every year the profit fluctuated 100% of the time, you'd be
Okay.
like, well, wait a second, I can't buy it on last year's number. That was your best year, and it shows that.
Right. You're a
So
little
you want to look at
inconsistent there.
long-term averages and say, listen, it could still be a good investment because you might just understand, hey, I'm going to make a lot or I'm going to lose a little bit of money every single year.
But over
you have to-
time.
Correct. Over time, I will do well. So
Right.
that's why you have to look at long-term averages.
I'd buy your apartment if there was a bat in it.
I want to buy my house. I almost sold it yesterday because I was so annoyed with the bat. So great stock to look at. What's the next one?
Good job, Robert. I like
Next one
Vale.
is BXC.
BXC.
B as in banana?
Yeah.
We have bananas upstairs.
BlueLinks.
BlueLinks
We have a
Holdings.
lot of-
BlueLinks
We have a lot of
Holdings.
bananas.
Oh my lordy. The distribution of residential and commercial building products. Its business is split into 2 categories, structural products and specialty products. Lumber, panel, lumber. Game
Oh,
over. Guys, look at this, $400 million market cap. Look at this PE,
What'd you say the market cap was?
$400 million.
Oh, okay. I think you said 4.
Look at the PE, 2.9.
So that's less than 20. We're happy about that,
Check.
right?
Profit margins 4.1, that's an X.
Ooh, not
No
bigger than
dividend.
10%.
Solid return on assets, not a good return on invested capital in the last 5 years. Okay, so far 1 check, 1 X. That 2.87 is pretty interesting. Okay, revenue growth of the last 5 years. 1.86, 3.51, check mark. Now guys, I immediately look at this and go, look at this pattern. Very steady, all of a sudden jumps up. Did they make an acquisition along the way here? I immediately look at these 2 years and go, how did they go from slow and steady $2 billion in revenue to all of a sudden $3 billion?
Wow.
I have to think it's an acquisition. You'll go to the cash flow statement and verify that. If you're looking at this right now, you just Google acquisitions for BCX,
Yeah.
BXC, whatever it is, shows you how much.
You get really good at your alphabet with this stuff.
Yes, you do. All right, profit. Guys, I don't like this.
Uh-oh.
22 million, 143 million, check, with 2 years of losses in between. Look at these losses along the way. Loss. So in the last 10 years,
Sick.
they've lost money 7 times.
Ooh,
That's pretty
7
good.
out of 10.
7 out of 10.
So
It's top 30%.
let's just be clear here for all the beginners like myself. That's bad, right?
I mean,
You're going to go through that.
Right.
But
You want to see a company profitable, right?
Yeah, I personally prefer, my personal opinion is, you can still make a good return on the companies like this as long as you understand what's the assets behind them. My personal opinion is I like to buy cash flow. I like to buy profit.
That makes sense.
If I don't see consistent cash flow or profit, and by the way, we haven't looked at the cash flow statement yet, but if I don't find consistent cash flow or profit,
It's like, what am I buying?
personally check out. That doesn't mean I'm right on it though, because there are other value investors like Gary, my value investing mentor, he'll buy a $20 million company if he thinks the assets are $40 million bucks, he can buy it for $20 million. He's all day long going to do that. Me, I prefer to make my investments based on cash flow and not assets on books. There are different types of value investing.
So just choose your flavor.
Correct.
Yes.
It's just like options. You have to pick whatever works for you and makes sense to you. For me, I understand it has to do with my real estate days.
Yeah.
I know real estate because I know cash flow. I know return on investment. That's the way I like to look at my companies.
Yeah. That makes sense.
That's why I look at bigger companies too. I like slow and steady cash flow. That's the way I like to look at it. Shares outstanding. They're criminals, guys. 8.97 and 9.47. They're issuing shares of
They're just
surprising.
putting them out.
Not
They say,
surprising.
let's make some money. See, they're trying to put that into their cash flow, but it's not quite
I
making
don't know.
it
By the
there.
way, that's the other thing. Find out what they're doing with those shares. They could be exercised shares from options from companies. We don't know what it is. It could be they're making acquisition. I don't know. Total current assets, 830 million. Total current liabilities, 291. Plenty of cash on hand to pay their current bills, and they almost have enough to pay all of their debts. Their debt's
Close.
about 1.1 billion. Almost enough.
Okay.
Let's look at the cash flow statement. What is going on here? Why are they missing years? Okay. Cash flow statement. 52 million, 86 million. Check. Average, 27 million. 27 million times 20 is $540 million. That's a check mark.
Wait,
So
where'd you get your average from?
right here.
Oh, it's just already right there.
Yep. I added this line, as everybody knows, to the software.
The Paul Special. You can't get this anywhere else other than here at Everything Money.
Or you
on
just
the
do more
app,
work.
Right?
Yep.
You can get it on the app or the website.
Oh, my Lord.
By all means.
Can I just talk about in the last 30 minutes how many people signed up? Thank you. It says Bienvenido. Thank you, Azeret. Thank you, Awaker. Thank you, Lonnie. Thank you.
You guys are
Bienvenido
rock
paid
stars.
twice. And thank you, Joshua. And thank you,
Nice.
Prashant. So we got to refund Bienvenido because he paid us twice.
Good job. Those guys understand an opportunity when they see one, right?
80
They
cents a
must
day,
have been
baby.
subscribed to the channel and they understand when they're receiving a greater value than the price that they're paying. This is
exactly
what
it.
you're preaching, right?
That's what I want to do.
Makes sense.
So it has a lot of checks here, guys. My personal opinion, and again, this isn't necessarily the right one, I don't like the inconsistent profit. The cash flow was pretty good, pretty consistent, but in past years, if you look early in the decade, why did they have these losses? That's a while ago. Did they turn things around? Maybe so. Understand this. You have to understand it. Remember, lumber prices are up a lot in the last year.
Right.
That can account for a lot of this $86 million. So don't buy a stock just because they had some fluke reason. Now, granted, 2.9 times earnings. It's pretty hard to say no to that. But look at the free cash flow. Their current free cash flow is 411 divided by 27 million. Over the last 5-year average. And what is that, 10, 15 roughly? So even though the price to earnings
Roughly.
is 3, the last 5 years free cash flow is 15. So it's not a screaming deal, and it took a monster year of free cash flow to get that. To me, it's probably going to be an overpriced company.
Okay, I got a question for you, Paul.
Yep.
Mr. Everything Money, Mr. Value Investor. How long, what time frame are we looking at? I mean, if you're saying, hey, I'm running this into the Everything Money app, how long of a holding time would you say?
Great question. So the stock analyzer tool allows you to analyze up to 20 years of analysis, okay?
Wow.
For me, I look at it as a holding period that I'm okay with forever as long as I like the company. So I'm not looking at it as like, okay, or until it hits its value and I have other opportunities to bet. So let's, for example, I bought a stock that I think is worth $30 and it's selling for 20.
Okay.
Let's say by the time it gets to 30, I reevaluate and I think it's worth 34. I might keep it.
You said you will keep it, right?
Yeah, I'd be like, okay, well,
it's
it's
worth
upside.
34, why not?
Unless I have another opportunity that is way better than the 30 to 40
You're
number.
weighing your opportunity cost.
I'm like, okay, well, I could just keep it, But I also have another opportunity with another stock that's selling for 15, and I think it's worth 25. That's a better opportunity than keeping my 30 and going to 34.
Okay. So the length of time that you hold is until it stops making sense.
Correct.
Yeah.
Correct. Now, it also depends on the kind of company it is. If I'm able to buy Google for the price I want it for, I will probably keep Google even if it's worth more than its price, unless it's insane. Because I look at it going, Google's a company I believe in long term. I don't want to play the game of getting in and out.
Right.
Unless I have some amazing opportunity out there where I go, I have to go enter this thing.
I see a reoccurring theme here.
Yep.
Nice.
So great question there, Damon. Thanks. What's our next stock there, Uncle Tim?
TGNA. TGNA.
TGNA.
Did Mason ask for LGMA?
I have no idea.
Ligma? Mason once made that joke on the show. A few people have made that joke on the show. Actually, I think David Spicer did too once.
Oh, that's great. Wait, Paul, you care to explain what Ligma is?
I don't really remember what Ligma is. All right, guys. Tegna, what do they do? Media company with portfolio of broadcast stations and digital sites, 64 TV stations and 2 radio stations in approximately 51 U.S. market. True Crime Network and what the hell is Quest? All right. $4 billion market cap, 7.8 PE, 17% profit margin, 2 checks off the dribble.
Okay.
A very moderate 1.6% dividend yield, eats up $62 million of free cash flow. Their last year free cash flow was $640.
They can afford it.
They can afford it very easily, 10-1. 7.4% return on invested assets. Return on assets. Okay. Let's go to the income statement. $2 billion, 2.95. Check mark there.
Moving on up.
Net income, 408, 509. Check mark there.
Ooh. That's a lot of checks.
Yeah, a lot of checks. All checks so far. Shares outstanding. Oh, they're killing us. 215 to 220. It's not a lot here, Damon. We're talking about 5 million shares on 215 million. That's what, at 2.5% over a 5-year period. But it's still something. So we got to consider that in there.
Maybe they hit all-time highs and realized it was an opportunity.
Maybe, but their PE is very low, so maybe it wasn't the case. Like, you don't want them issuing shares when the stock is underpriced, because they're basically saying, hey, everybody, here's good value out there. Go take it from me. No, you want them to issue shares when the stock is massively overpriced.
Makes sense.
Balance sheet, 693 million versus 389. Check mark there. Now remember, a company like this is going to have a lot of debt because these companies that tend to buy assets like this will have a lot of debt. So factor that into your analysis. And then the cash flow statement. 595 to 640 for an average of 450. Check mark 450 times 20 is 9 billion. It's currently selling for 4 billion. That is a massive check mark. It's currently selling for under 10 times free cash flow. Why would that be? Damon, can you give me a reason why you think a company like this would be, apart from its shares outstanding, why is this company selling so cheap? 8.76 times free cash flow over the last 5 years and about 7 times its last year's free cash flow. Why is it so cheap?
That's a good question. I'll have to think about that one.
If I were to guess, TV stations. Everything's going to streaming now. Everything's going to, I have not watched regular TV in how long?
Yeah, Netflix, Hulu, Disney Plus.
Yeah, that's all. Even if I do watch, that's what I'm watching. You know,
Right.
sports would be the only area in which we watch live TV, right?
Yeah.
So, no. So the question becomes, TV stations, what does that mean? You get to understand these guys' assets. Like, are these assets they have, these TV stations they have, what is the reason why people are going to continue to watch them? I don't know. That would be my concern going forward with the TV business.
You said there are a lot of radio too, right?
There's radio.
Radio's a dying medium.
Radio's been dying. Faster than TV. More than TV.
So these are like paper companies, Dunder Mifflin.
Yeah, it's maybe again, if you're looking at their financials though, now the question becomes.
But maybe they can evolve with the times too, right?
Maybe.
We'll
There's
see.
a lot of these companies that are like Spectrum and AT&T, they're starting to get into that streaming area, so it's not just all cable now.
Yeah,
so you're
Now,
right
somebody
about
might
that.
argue, Paul, their revenue's increasing. Yeah, but look at their acquisitions. Here's the line of the acquisitions in the investing section of the cash flow statement. Big acquisition here. Reasonable. And this is net acquisition. So they might have had some dispositions in here somewhere. So they're making acquisitions, guys. Another big one. That's a way to increase revenue without actually naturally increasing revenue.
No,
So,
I got another rookie question here.
yep.
acquisitions. So what kind of things would these businesses be buying? Was it like stakes in other companies?
Or other TV stations.
Or
Pokemon
or
cards?
streaming networks or small streaming networks, some things that they can
They're
start
probably
getting
buying
involved.
TV and radio stations because
Yeah.
that's what their business is. So
Yeah.
they're going to acquire other companies that have those.
Okay.
Yeah. So that's the thing to watch for. You want to make sure when the revenue is increasing, you're looking at their acquisitions along the way because, I always tell people, look at the same asset growth over the year to year. So exclude new acquisitions, how did their revenue do? If it went down, did it go up? Here, I'm a little skeptical of it because it's TV stations. I mean, are they just making acquisitions to drive up the revenue in a fake way? What's so funny, Tim?
Spicer.
Spicer's going nuts about seeing the do the shorts check.
Spicer wants shorts.
I told him I'll get
Okay.
him into the show.
All right.
Here's Matt taking credit again for something stupid. All right. Do we have another stock or do we have...
That was it.
Okay.
So far.
Listen, it's 2:08. My throat's hurting. Let's talk some more about some other stuff involving... guys, don't worry about...
Remind people, iOS.
Android is coming later today, guys. iOS store,
iOS
the app
now.
is there. Android, you're going to get it later today. You're going to get it later today.
And give us some
Android,
reviews.
you're going to get it later today. And if you are going to give us reviews, if you do not think it's a 5-star review, please email help@everythingmoney.com. Let us address the issue, and then give us a chance for you to give us a 5-star review.
If you really need the back button, we'll add them.
And
So-
if you guys
and
want the back button,
tomorrow,
I think we should. I think we're
And
going to
this
put the
makes
back
sense.
button.
I mean, this isn't just a one-way street here, guys. Everything
Yeah.
money is investing in you, right?
listen,
I mean,
we've
we want to earn those 5 stars.
And we've-
So
we've been-
the goal here is to really, truly hear your feedback because
Yeah.
we care. We can apply that.
I've
Right?
been playing with the app for like 2 weeks, and I send Tim, how many things do I send you a day? I'm like, Tim, I want this, I want this. There's going to be things out there that you guys are going to notice. We will do it. If it makes sense, we will do it.
But don't give us don't say, hey, I'm going to give you a 3-star review because I want this and this. No, it's
No.
about, is the app working? Is it
Yes.
working the way you want it to work?
Yes.
If you want extra features, that's totally different. Don't
Correct.
don't punish us because we don't do a feature because there's a lot of things that go into features and just, I want it this way. The request of selecting how many years of assumptions, how many different levels of assumptions, absolutely easy request. It's a great request. We've talked about it. I love it.
This is all about how we get started, how do we make it better.
Furthermore, guys, even if it's just feedback, that matters. That absolutely matters. If you just have a comment, hey, I like this user interface. Hey, I wish it was blue. Hey, I want to see a picture of Paul's puppies. Anything
Let me say something
where we
else.
can earn those 5 stars.
Yeah, and for those of you who go to the BlackBerry store, if you want to use it on your BlackBerry,
BlackBerry.
and the Motorola Razr, we also have an app in the Motorola Razr
And
for
we've
you.
actually made a feature where you guys can BBM each other about the app. It's great.
Wait,
Just
Razor
send
is
me your
still a
BBM
thing?
code.
No, it's a joke. Somebody
Oh,
said-
I was like, there's a razors? Razors were all the craze back then, but wow.
I never had a Razr. Did you?
No, but
I
I
never
played with the
did either.
Bluetooth feature on Razors.
They had Bluetooth feature on the Razr?
Yeah, well, I remember right when Bluetooth came out. See, I'm old and gray. I'm a grandpa here, right?
I'm older than you. He's older than you. Mo's not. Tim's older than you.
But yeah, when Bluetooth first came out, Razors had the feature.
I do want a
It was
Huawei
amazing.
phone really badly.
What's that?
The Chinese version of the Chinese Android phone that is banned from the United States.
Why is it
Whoa.
banned?
Because allegedly they just take all of our information, just download it to their server in Huawei.
Oh,
For
So
that.
Allegedly, my son, we like to plead not guilty. My son allegedly hit a kid over the head with a chair. We'd like to plead not guilty. This is in a court of law, and we have visual evidence of your son hitting a chair. He's guilty, and he's expelled.
All right, Paul.
all right, do the
It's a
shorts.
boring day of shorts.
I know.
all right.
What are you gonna do?
Check out the shorts.
By the way, I spilled salsa on my shorts earlier.
You can get a zoom in on that if you want.
Right there.
There we go. We call this
Right
value
there.
investing right here.
Hold on.
Just boring old khaki short. I think the shorts hype is kind of done because I don't wear like the crazy
The
shorts.
short type is like Neo stock right now.
Hey.
Look at these calves. Look at these calves, Tim.
He says he's a biker.
I'm not a. Well, I like to bike, but I don't bike a lot. All right, we're done.
Yep.
Good. All right, guys.
Did those come with a skateboard?
Mason, it's bedtime.
Those come with the skateboard. Nice.
Okay. So you cannot sign into the app unless you're a Patreon member. That is correct, Emmanuel. We're not UNICEF here. We're not giving away things for free. This stuff costs me money, and I'm trying to finance my cocaine addiction.
How do they sign up?
Guys, patreon.com/everythingmoney. You get the app. You get every update to it. It's awesome. You're not gonna have to sit there and you get locked at your price, 80 cents a day, $25 a month. You're crazy not to. As Damon said, value versus price. This is all day long. Everybody saw my white charts. The same data here on white charts is $200 to $500 a month. The only difference is you don't get to download data and you don't get to, it doesn't have technical stuff yet. I don't know how white charts justifies the price, but they have great customer service, which we do too, but you get assigned a rep. Versus our system, which is a few reps handle everybody. This is a no-brainer. You get locked in your price. I don't know what to tell you besides if you don't do it for 80 cents a day, what are you doing? What are you doing?
Well, like if you don't do it for 80 cents a day, you can always do it when the price goes up. And
Yeah, it's
you're
true.
like, well, I've missed out, but now
Do you know what it originally started at, Damon?
what?
$8.
$8.
It was originally, what is that, 27 cents a day was the original price for it.
So you guys can see the pattern here. You can see the trend, right? The trend is your friend, right? That's one of the things we say.
Well, not in this situation, though.
Uh-oh.
This situation, the trend is not your friend because you want to make sure you buy it now. Every month it goes up at least $1. This month, Patreon had it. Oh, and by the way, the other thing is, guys, great news. We're working on our own system. You wanted to pay sales tax because we're not big enough quite yet. So you'll save that money initially day one when you come onto our system. We'll have to pay sales tax in the future at some point in some states based on their rules. If you have a problem with that, blame your state. But that's our plan is to create our own system.
Our European patrons are going to save a lot of money.
Yeah, the VAT tax is like 10.5% or something.
Wow.
So we only charge that to be your savings for coming off Patreon and coming to our system. You won't have to pay the sales tax. And that'll be coming out when, Tim?
It's going to be coming out soon, probably end of August.
End of August.
End of August.
End of August, you'll be able to save money like usual with everything money. Oh, jeez, again. All right, do we have anything else, guys?
Nope.
213. Thank you, Damon, for coming in.
By the way,
Wait,
we hit 56,000 during the show.
We hit 56,000?
Yeah.
Congratulations, everyone.
job.
56,000. We literally did, last year, Damon, our first live, we hit 31 people and we were like ecstatic.
Yeah.
Remember that? We hit 100 people a few weeks later. Maybe a couple months. I don't remember how long ago, but now we get 200 people on the live stream before we even start the show. So it's been growing and it'll keep growing.
But it's ending now? I'm sad. I don't want
yes,
it to
it
end.
is. But Andre said the question: does Paul have or agree to a dividend portfolio? I like dividends. They're very, very tax inefficient, but I like them for reasons that have nothing to do with generating income for myself. It has to do with other things I won't get into right now. But I like the dividends for another strategy I use with stocks and real estate combined. But dividends, I want everybody to remember, is a tax inefficient strategy. You want to I'd rather have the company buy back their shares than pay dividends. The reason dividends are tax inefficient is you've already paid a corporate. If you guys look at the stock, look at any stock. Let's pull up Microsoft. Microsoft income statement. Income taxes, $9 billion, right? When they pay a dividend of $8 billion, everybody, it's out of this $56 billion after taxes. You got to pay your own personal taxes again on that. It's tax inefficient. If they just use that money to buy back shares, if there was a low price and not enough stock, you have to pay tax on that, and you get higher ownership of the company by buying back the shares.
Now, aren't there special type of dividends though? There's the I don't know what they were called.
Preferred?
Yeah.
Yeah, those aren't really a big deal anymore.
Yeah.
That was a big back in like 80, 90 years ago.
Yeah.
And even then,
Security analysis days.
yeah, and even then, it's still in taxed at a dividend tax rate. And by the way, Biden's trying to increase the dividend tax rate, which is fine. But remember, it's just going to give people companies another reason to not pay dividends.
Well, if you want dividends, put it inside your Roth IRA.
That's true. You can put it inside your Roth IRA. That's a very good point. Dividend portfolio with your tax efficient accounts, 401k, Roth IRA. You don't pay the dividends. You don't pay the taxes till later on in life. All right, guys, thanks very much.
Wait, are we saluting?
We're saluting.
Oh, but I don't want it to end. I wanted to keep on going. Let's just stay live. Let's have a dance off.
We already.
And Andre, so I just answered this question. Just joined the Patreon, so thank you very much, Andre.
Yeah.
Thank you, Andre.
We're gonna do a dance up. Did we want to end with Damon dancing to some music?
Hey, yeah, put that theme song on.
Put the theme song
I'll
in.
bust
Damon,
a
why don't you
move.
come over here?
I get to show off a little bit today.
No way.
For everything money.
No chance.
You can do it.
Zero
We're
chance.
still live. We're still live.
We're still live. We're not dancing.
You got people on. Come on.
It's a delay. There's no way that's happening.
There you go.
There we go. All right, guys. This is how we're going to end the Everything Live money session. There we go. Are you ready to go?
I don't know what to do.
Come on.
All right, ready? I'll do it. Just kidding.
You're going to do it. Okay?
I'm not doing it. All right, guys, thanks very much. Have a good one. We'll see you guys on Thursday for the upper tier live stream only. Thanks very much. Thank you very much.